Well, the Indian economy is back to growth in Q3 fairly on expected lines. In fact, the Q3 GDP came in at 0.4%. This is versus our ETNA poll expectations of a growth of 0.6%. We're also seeing some amount of revisions to Q1 and Q2 GDP. But what is slightly perplexing is that the second advance estimate has pegged the FY21 GDP contraction slightly higher at 8% versus the earlier expectation of a contraction of 7.7%. Having said that, if you look at quite a few of the highlights that is coming from Q3 GDP, well, some of the highlights are fairly encouraging. Firstly, yes, the agricultural sector growth is far higher than expectations at 3.9%. Which is definitely good, as it was expected that quite a few of the economists rather were expecting agriculture sector growth anywhere between 3.5 to 4% odd. Pickup in government expenditure also has been seen in Q3 fairly on expected lines, and in fact there are expectations that in Q4 we should be seeing a higher pickup in terms of the government expenditure. There has been pickup in construction activity as well at 6.2%, which is fairly positive. There is also some amount of pickup in the financial services real estate sector, which is another positive sign. We are already seeing that the bank credit growth has slowly started picking up, and quite a lot of the bankers are already seeing a double-digit growth possibility in credit growth in FY22. On the flip side, if you look at the consumption, well, in Q3 the consumption has slowed down slightly. This is coming on the back of that in Q2 we did see a higher boost in consumption on account of the festive season. Gross fixed capital formation is also yet to pick up, and we will be watching out for growth trends within the gross fixed capital formation. Having said that, if you look at what quite a lot of experts do state, they do state that in Q4 GDP is likely to be better according to the data that is coming up from the high frequency indicators. FY22 GDP is seen in double digits by quite a few of the economists as well as Reserve Bank of India. For instance, Deutsche Bank research pegs FY22 GDP at 10.5%, although it is coming on the back of lower base. Also, there are certain risks to growth which need to be kept in mind. First is the rise in COVID cases that could lead to localized lockdown. So that is something that we need to be watching out for, and also the risk of rise in oil prices. And also, most importantly, what we saw today was the financial volatility. There are expectations that 2021 may see normalization of liquidity conditions as well as beginning of the normalization of easy monetary policy, and that could lead to some amount of financial market volatility. So yes, we need to be watching out for these risks, but as of now Q3 GDP is certainly positive. We are back in growth. Q4 GDP is likely to look better, and in FY22 we should be seeing double-digit growth. In fact, Ashima Goyal, who is the member PMEAC and professor at Indira Gandhi Institute of Development Research, did state that the government expenditure, which had slowed in Q2, has reported a pickup in Q3, and she also believes that high-frequency numbers suggest a pickup in growth and turnaround in investments, and hence she believes Q4 GDP is likely to be better. Saugata Bhattacharya, who is the chief economist at Axis Bank, still highlights that yes, financial market volatility is something to be watched out for, and Kaushik Das of Deutsche Bank does expect the FY22 GDP coming in at 10.5% after penciling in the risk of rise in COVID cases and also the risk of rise in oil prices. Overall, yes, we are back to growth in Q3.